Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be looking at the market cycle return on investment, or ROI. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Market cycle theory or discussion videos are some of the more interesting videos that I find in making, because they sort of lead to a lot of different sort of thought-provoking ideas that really make you think as to what's actually going to happen. There's a lot of theories going on right now, but I do want to at least go through a few of them, where we currently are, how it compares to prior cycles, so on and so forth. If you're not familiar with charts like this, the market cycle ROI is basically just looking at the return on investment of Bitcoin at some prior major low, right? Now, you could combine the cycle one and cycle two to be one cycle. A lot of, some people do that. And I think it's actually a relevant way to look at the market, right? Like, I don't think it's, wrong to look at the market like that. If you look at it, if you look at it like that, is basically just saying you're combining, this move here and this move into one cycle, which again, you could come up with a reason why that's relevant. The reason why I don't have it like that on the current chart is because this was, this move right here was a pretty significant correction, right? Like it was a 94% drop. And so if you get a 94% drop, I mean, in my mind, it makes sense to sort of separate that out. But in another sense, right, if you think about like pre-halving year, halving year, post-halving year, I can understand why you wouldn't. Which also brings me to the next point of, are market cycles, and we've discussed this before, right? But are they just sort of a way that we're sort of rationalizing how price is behaving, when market cycles are just something we're making up in the first place, right? So there's also some element that could be true as well, that they don't actually exist, and we're just using it to help us better understand the market, but perhaps it's a bit more random. And a lot of, I mean, there's evidence for that, right? I mean, like, last cycle, the major move that we had sort of topped out in early 2021. I mean, yes, we went on and put in a slightly higher high at the end of the year, but essentially the move was over by April, except for, a little bit more of a move that came about 6 months later. So I mean, I think there's relevant ways to think about the market, and I don't really think any of them should be viewed as necessarily a silly idea. We all put out theories. Some pan out, some don't. And you sort of try to learn what you can, move on, and try to better understand what's going to happen next. For instance, I mean, one of my views coming into this year was that the highest Bitcoin would go this year. Again, this was coming, when the year started, was I said, that Bitcoin could go as high as 35K. Well, I mean, clearly we've gone above that, right? I mean, Bitcoin has gone to 38K. So, putting a lid on it at 35K hasn't panned out, right? And it really does go to show you that Bitcoin can humble even those predictions that seem somewhat lofty, right? I mean, at the beginning of the year, Bitcoin is at 16K. Saying 35K seemed like, sort of a high-end target, and here we are just chilling above 35K. So that's something worthwhile to consider. So there's a lot of different theories right now. Sort of go through a few. One of them is that there are no market cycles, and Bitcoin's just moving randomly, which I can appreciate. There's another theory that is somewhat popular right now, and that is that the view that Bitcoin will put in a new all-time high before the end of the year. One of the reasons that people would say that is, if you look at some of these other moves, right? I mean, like, there are times where Bitcoin goes up 100% in a few weeks and sort of just blows us out of the water in terms of completely going way far above what people thought was necessarily possible. So there's that theory. There's another theory that some people are following that says that Bitcoin will put in a new all-time high before the halving, right? So not necessarily limiting it to this year, but saying that it could extend. You could see a new all-time high before the halving. There's, of course, the theory that this cycle won't be different in terms of, Bitcoin will sort of just, go up, consolidate for a while, maybe get a few scares here and there, but ultimately top out late 2025, just like it did the last three cycles, right? Into 2021, into 2017, into 2013, right? And it never was more complicated than that, right? It was just Q4 of the post-halving year is when Bitcoin has historically topped out, right? Every single time. So that is something that I think you have to consider as well, right? I mean, like, is it just that simple, Q4 of the post-halving year, or could it be more complicated? Could you see a top come sooner? Could you see a top come in 2024? And I know, like, some people are probably listening to all these theories, and it's like, well, what are these people smoking? But guys, I mean, it's a market. Anything can happen, right? Anything can happen. I mean, within reason, right? I mean, like, I don't think anyone's going to sit up here and with a straight face say Bitcoin's going to go to some like astronomically high, level, like millions or something in the next few months, and think that there's a realistic chance of that happening. But within reason, anything can happen, right? So I want to talk about a few of them. One thing that I want to sort of touch on here in terms of looking at these cycles. The first thing I want to do is I want to get rid of the first two, okay? Because there's a lot of volatility back then, and the last few cycles have not followed those at all. So we're just going to go ahead and remove those, and we're just going to look at the current three. Now, where they're being measured from is so the one from 2015 is being measured from. Let me see if I can get this. Trying to find the arrow. I always forget where it is. It's measured from here. Some exchanges showed a lower low here, but we're just going to measure it from here because it really does make it a little bit more comparable, easier to compare. Then from here, and then from here. Now, if you remember back to 2022, back in the summer, and I'll stick with this. I mean, until I'll keep saying the same thing. But one of the things we said back over here was that 17.5 was not the bottom, and that people were falling for the same trap that they fell for in 2018 when they thought June was the bottom, right? So we said it's not. We'll likely have a drop in Q4, and we got a drop. Now, it wasn't nearly as big of a drop as we got over here in 2018. We still got a drop. But what I said over here in the summer was that 17.5 is not the low. The Q4 low could be the low, right? That could be the low. But the only reason I wasn't willing back then to say that whatever drop came in Q4 would definitely be the low was because we were going into sort of a macro environment, right? Inverted yield curve, claims going higher, all that's to continue claims like initial claims, going into a macro environment that, except for the brief move in 2020, crypto has never experienced, right? So this low is comparable to that one, right? Now, last cycle, we did get a pretty substantial drop in Q1 of 2020. Now, there's no guarantee that something like that's going to play out again, but if a recession were to materialize, I have to imagine that it would affect Bitcoin. What I find interesting is that as humans, I think we always, want to make this time different. And there's a chance that it is, right? Like, I don't want to say that Bitcoin can't go to a certain price by a certain date, right? I don't want to say that because we know that it can. I mean, if I'm going to come out and say that, the high for the year will be 35K and then watch it go to 38K and the year's not even over with, who knows how high it'll be. But, putting a lid on the price by a certain time is a dangerous game to play. I mean, it is. And there's no telling exactly where the price will sort of top out by what time frame. But one interesting thing is we have a habit of trying to figure out why this time is different. What's fascinating is if you look at the ROI of Bitcoin this cycle and you compare it to the last two cycles, you can see that it's exactly basically where it has been in the last two cycles at this point, right? It's basically at the same spot. Despite all the sort of ideas that this time is different, it's actually following the last two cycles pretty closely so far. Now, if you look at the last two cycles, we'll just look at one at a time here. So if you compare this cycle to 2015, 2016, this is where we are, right? You can see what eventually came after it. It was just a continued slow grind up until the end of 2025. If you compare it to last cycle, it wasn't as easy, right? Certainly wasn't as easy. We sort of grinded higher for a little bit, and then we had the pandemic, and we got a pretty substantial drop before ultimately the Fed printed a lot of money, and then Bitcoin, of course, rallied on to much higher prices. So one thing that I will point out, although I am somewhat remiss to point it out because of all the arguments that I got in last cycle about it, is that Bitcoin shows it has a history of diminishing returns. And I can already see people talking about it on Twitter saying that we won't have diminishing returns. Some people saying we will. Last cycle, I was very vocal about diminishing returns. And but I think the issue when you get very vocal about it is then people who have price targets that exceed that of which would call for diminishing returns will basically say like you're against Bitcoin if you think that it can't go to a certain price by the end of 2025, right? Like you're against it. And it's like, well, it's not that. It's just like looking at it and saying, hey, we've had diminishing returns in the past. We'll probably have diminishing returns in the future. Doesn't mean that it has to play out. And I honestly don't even really want to get into the conversation of it too much this cycle. I mean, I almost want to remove myself from that conversation. I don't, it's just something we've seen in the past. It doesn't have to play out forever. But why would I go into this cycle, assuming that it's different, right? Why would I? I mean, you can see that the ROI from the low in the third cycle was about 110. Last cycle, it was only about 20, right? So, I mean, a pretty big drop from one cycle to another. Should we assume that the next one will come in even lower? That's sort of my baseline assumption, but I also don't want necessarily to marry that idea either. But again, it's sort of going back to this idea of like, well, is this time different or is it not? For sort of the idea of can Bitcoin go to a new all-time high by the end of the year? Can it go to a new all-time high by the halving, and so on and so forth? What's fascinating is despite trying to sort of convince ourselves that this time is different, I mean, so far it's actually playing out in a very similar manner, right? Very, very similar manner. Now, some people might look at this chart and say, well, it's keeping pace with the last two cycles, so why can't it go all the way up to where those cycles went? And that was actually a common thing we sort of had last cycle as well, when we were at one point outperforming the prior cycle. But you can see that despite the fact that it was outperforming it at one point, it still ended the cycle with diminishing returns. And technically speaking, the current cycle is outperforming the last two on this day, right? I mean, on this day, it's up 2.36x. The last two cycles were 2.18 and 2.22x at this point in the cycle. Now, you might say, well, what could cause us to sort of slow down? Well, I mean, I think the biggest thing is sort of the macro environment. And again, I know a lot of people are just going to think about that and say, well, just brush off the macro. And hey, maybe that's the right view. Maybe that is the right view. But if there were to be some type of like slowdown in the economy in 2024, we have yield curve inversion and all of that stuff. If there were to be some type of slowdown and then Bitcoin were to then sort of fall back in for a few months, that could end up, getting it on a course for, more so diminishing returns. And if that doesn't happen and it continues to follow this, it still doesn't mean that it will exceed these. You could just get a recession come in, later on, right? One theory is that Bitcoin, I don't know who exactly talks about it. There's several different people that talk about it, right? But the idea is that Bitcoin would rally into the halving, put in a top, that be the macro top, and then the recession occurs. Which also, I mean, I think you have to consider all possible outcomes. If you go into it thinking that one thing has to play out over another, then you're basically saying, hey, I'm not going to hedge myself for any other potential outcome. One of the things I've said many times, although many people sort of ignore it, is that a DCA strategy for Bitcoin tends to be the best strategy over a longer period of time. For the altcoin market, it's hit or miss. It depends on which altcoin you're buying. Some do well, some don't. But for Bitcoin, a DCA strategy tends to be the best strategy, and you just tune everything else out, right? It tends to work better than most other strategies. Not every strategy. I think there are some that might perform better, but I mean, for the most part, a DCA strategy tends to do quite well. And even if there were a drop, right? I mean, if there were a 50% drop, a DCA strategy would still probably outperform most other strategies over a longer period of time. So I will continue to say that a DCA strategy does tend to do better than other strategies. I will also say that, I've said many times that in pre-halving years, having a crypto portfolio that is Bitcoin heavy as opposed to altcoin heavy tends to be the better composition because the dominance of Bitcoin goes higher. And I know a lot of altcoins are off their lows recently, and the FOMO is there, and the FOMO is real. And if you want to get exposure to the altcoin market, then of course you're free to do so, right? You're free to take on that risk, and hopefully you can enjoy some nice gains, assuming if Bitcoin can stay elevated. But the reason why I sort of had that view is because my expectation was that the dominance of Bitcoin would go higher in the pre-halving year, and therefore Bitcoin-heavy crypto portfolio would likely outperform an altcoin-heavy crypto portfolio. Of course, there's several altcoins that have drastically outperformed Bitcoin, but that's always the case, and I've said that throughout the entire year. So, my strategies, and I've said this before, is right. DCA Bitcoin is the best strategy. We talk about the downside risk all the time, and we're going to keep talking about it, right? There is still an inverted yield curve. There is still an unemployment rate that is trending higher. There's all of that stuff. So we're going to consider the downside risk every step of the way. And a lot of people don't like me for that. They don't like it that I talk about that. They would prefer sort of the up only. And on this year, Bitcoin has put in higher lows, right? But I'm still not going to stop talking about the downside risk because I've seen what happens in certain cycles where people ignore the downside risk and then they get wiped out in a month. So please understand that a DCA strategy tends to be best for Bitcoin over the long haul. I've said this all year, and that altcoin DCA only works if you pick the right one, right? If you pick the wrong one, then you would have been just so much better off sticking with Bitcoin in the first place. And then maybe using that Bitcoin to convert to altcoins later on, because normally Bitcoin leads a potential bull market. Now, if we continue sort of grinding on this path, what could take Bitcoin off of it and sort of lead it into diminishing returns? Well, if there is a recession, right? If there is a recession, you can always get an example where Bitcoin sort of falls back in 2024, scares everyone, and then still rallies in 2025. There's another idea that Bitcoin just rallies now and tops out sometime in 2024, and then you spend the next year and a half, 2 years in a bear market, right? Because there's a recession. Recessions, I think as my generation knows them, are very different when they actually are, right? I think a lot of people think of a recession as like March of 2020, where it's just like, oh crap, a 60% drop, print some money and we're good, right? But that's not how recessions normally play out, right? A recession does not normally play out over the span of like a month, Historically, recessions can take quarters, if not years, and it's brutal, and people are getting laid off, and people are scared. I think a lot of people sort of think about recession as when your neighbor is losing their job. But recessions are probably better described when everyone is worried about losing their job, and it's not just some nebulous person out there that's losing their job, but it's like all of us like wondering if our job is secure or not. That's what a recession is, right? So, in terms of the current cycle, again, going back to this idea that I said back in 2022, I said that 17.5 is not the low, but I said that the Q4 low could be the low. But if it's not the low, if this is not the low, it's because we get a recession, right? If it's not. And I'm open-minded to it being the low. But if it's not the low, it's probably because a recession is coming, right? That would be the reason. It's just like over here, right? Like December 2018 was the low, but we came pretty darn close to taking out that low in that very brief recession that we had, right? We came pretty close. And it didn't even happen until the halving year. So whether this low holds over a longer period of time will probably be dependent on if the economy goes into a recession. If the economy does not go into a recession, then the more likely outcome is sort of a slow grind higher with consolidation periods, right? As you get into the halving year and the post-halving year. If we do go into a recession, which there is certainly a risk of, right? There is certainly a risk of, especially if you look at like the unemployment rate and that sort of stuff, then you could imagine a scenario where the cycle ROI fades for a couple of quarters and then picks back up in say like late 2024 or 2025, right? But I mean, I can think of all sorts of possible outcomes to this, right? You could think about a recession occurring, in the first half of 2024, Bitcoin finding some weakness and then sort of accelerating back half of 2024, just like it did the back half of 2020 into a mania phase in 2025, just like 2021. But there's also merit to the idea that Bitcoin grinds higher. It puts in a cycle top earlier than usual, and then you get a recession and you get a bear market that's much more brutal than people are expecting because it's actually tied to a recession and not a normal bear market. So there's all sorts of ideas. I just want to sort of openly discuss these ideas with you so that you can plan, you can hedge, right? If you don't think about other outcomes, then you can't really hedge as well, right? If you only think that one thing has to happen, then you're not prepared for all these other potential outcomes. So that's why I say, like, you should consider all these outcomes, right? There's the people that say new all-time highs this year. There's the people that say new all-time highs before the halving. There's the people that say new all-time highs in late 2024. And there's other people that say all-time highs won't happen until 2025. And then other people say there will never be all-time highs, right? There's all sorts of views out there. And, all of them probably are worthwhile to consider for whatever reason, right? All of them. So please consider those, how you can be hedged to sort of combat all of those potential outcomes. And again, as a reminder, right? DCA over the long haul tends to work out the best rather than timing the market. I'll keep talking about, downside risk as I see fit, especially until the resolution of the yield curve and in terms of the uninversion process of that. But who knows? I mean, it could be months before that happens. It could be a year before that happens, or it could be tomorrow, right? I don't know. But I did think it was at least worthwhile to sort of check in because I feel like we try to make it different than what it is, right? We try to make it different than what it is. And just like in 2018, the June low was not the bottom. We got a more significant low in Q4, right? And in the pre-halving year 2019, people were calling for a new high. But, it ended up topping out. We did wick up pretty high, but if you look at like the weekly closes here, we ended up topping out right at this level, right? Where it topped out in Q1 of 2018, and then it bled back down. And that bleed back down corresponded to once we started to get rate cuts, right? So, that's something that I think you have to consider as well is that, at some point, I think the average amount of time that the Fed reaches, that they basically just sit at the terminal rate is about 8 months, which puts you out, like in March or something, sometime like late Q1, early Q2. If it plays out on average, but the chances it plays out on average are probably pretty low. What is an average cycle, right? They're all various lengths. But that is something to think about as well as, do you get some type of like mid-cycle top that then we bleed out from, and then QE returns like late 2024, just like it did over here, and then you get some type of massive rally into 2025, right? So there's all sorts of potential outcomes. Please consider each and every one of them as you navigate the markets. The markets humble us all. Again, my view coming into the year was that Bitcoin would not go higher than 35K. I said it was likely to go half up and half down. Clearly, it's more or less mostly gone up, not really down. It's been higher lows, but the markets humble everyone at some point. So consider all the different views. Consider the different theories. Whether you think it's going to play out like diminishing returns, or if you think this cycle will be different, that's up for you to decide. We will discuss this as the market cycle carries on. If it accelerates to the upside, then it could be similar to this cycle where then you get some type of massive cool off period. Could be, it could be like a recession or a recession scare. Or if it does something like 2020 where it then bleeds back down into 2024, it could just mean that you sort of have to go back down to those lower prices, confirm, like a macro higher low or something like that, and then go up, sort of out into the late halving year, post halving year. All sorts of theories. Make sure you guys subscribe to the channel, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.